Anuj Kumar, Managing Director, CAMS, is with us on the show to discuss that and lots more. So to begin with, you have the domestic inflows via MS, which have been quite steady over the past couple of years. For SIPs as well, have been above 11,000 crores in the last 7 months. So what's the outlook in terms of the MF business? And do you think that we are likely to see the targets get increased?
So overall, I think if you look at the history of the mutual fund industry and just focus on the last 6 years, asset growth has been in the high teens. And our expectation is that as the basic building blocks of the industry become more mature, and those basic building blocks are there are more investors coming in to invest, they are committing more and more serious and steady money flows. And the options outside in terms of interest-bearing instruments, other competing products are relatively less attractive. So long as those basic building blocks continue to be as strong and continue to be mature, our expectation is a high teens growth will continue to happen in the industry. As far as the share is concerned, our share has been in the 69 to 70% range for over the last 6 months. The share can, temporarily move depending upon how specific mutual funds have behaved and the market share has behaved, because that is what drives the market share. But overall, that has been a steady number.
Right. Anuj, also brokerages are suggesting that integration of Franklin Templeton RTA operations and winning the mandate then of Zerodha AMC will add strength for the mutual fund business. What kind of revenue potential can we expect from these?
So overall, I think the coming over of Franklin Templeton was a more strategic signal than just a lump of revenue coming in. The strategic signal was that none of the mutual funds now believe that this activity should be done by them. It is extremely complex and extremely multi-layered for anyone to contemplate doing it by themselves. So therefore, the outsourcing model or the RTA model got more strengthened. That is the strategic signaling from that move. From a revenue perspective, I'll give you overall numbers. Franklin brought in about 2.25% expansion to our overall asset size. You can make out the revenue numbers from there. Zerodha, of course, has been the leading brokerage in India, has disrupted that entire market. And our belief is that in the mutual fund market, they will bring in a series of innovations to bring unacquired customers into the fold and also create more innovative products. But that launch is yet to happen. So therefore, we will see how that goes, but very, very bullish on both these acquisitions.
Sure. In a recent analyst meeting, your company stated that revenue from non-mutual fund business is expected to increase from 10 to 20% in the next 5 years. Which areas and products will you be launching in this segment, and will they be on a higher margin side?
I think overall as a platform company, our margin profile is pretty solid and we want to keep it here, which means that starting from a 35 to 40% EBITDA range, we've climbed a little beyond 40, although our forecasts continue to call in the range of 40% EBITDA. So that's a steady margin number that we want to continue hitting. From a product suite perspective, I think we've got almost a hands full. We are building and expanding the core business, which is continuing to do well. We have the pole position in the AIF and PMS market, a very exciting market, which, as you're reading the forecasts, may perhaps be the fastest grower in the overall capital market space, and we have a pole position there. Our payments business is doing well, and we have put out both the NPS CRA platform in the market in the month of March this year, and we are live with our account aggregator and TSP offering. So it is not that we intend to launch a lot of new products. Our intention is that amongst all of these that I stated, and alongside our KRA business and our insurance outsourcing business, this will make up the overall product suite. We will continue embedding the character of platforming in each of these offerings and continue expanding our go-to-market strength, which means we will sell better and better, which will bring in more revenues.
Good morning, Nantara also joining in. Now, if you want to see the last 7 quarters, the operational margins have increased to a peak of 46%. But going forward, the company's guidance is 40%. Are you being conservative?
The reason for this is that the expectations to expand capability on the technology, security, BCP, fraud prevention, and many other risk-related sides continues to deepen. The expectations of the market is extremely high, gold standards of quality, privacy, and conservation of any kind of risk incidents from us. All of that needs a lot of investments. As you've seen, the technology market, just in terms of recruitment, has been literally on fire the last maybe 1.5 years, and will continue to remain in that state till a correction in the hiring market happens, which means from a compensation perspective, that skill is becoming tougher and tougher to acquire and retain. So if you see all of this, which means expansion in relevance, expansion in scope related to the various items I said, and overall expansion in cost of the labor markets, I think we want to be conservative and be sure that we hit the numbers, than call numbers which will be at risk and therefore can create dissonance in the marketplace.
Okay, that's the word that's coming in as far as the digital, as far as the guidance goes. And now you know, ladies and gentlemen, why that guidance of 40%, even though we've seen a peak of 46% in operating margins. Going forward, what kind of digital initiatives can we expect from the company?
The digital initiatives have done very well. I mean, if you see the last maybe a 15-month period starting April last year, we have put out a variety of digital interventions in the marketplace. Our overall CRA NPS platform has gone live, a brand new platform. Our account aggregator and TSP platform is live, and both of these are selling, which means they're acquiring new clients and customers. We put out with the jointly with the other RTA, MF Settle in the marketplace, which is a very, very strong innovation in servicing customers and enabling them to do various kind of transactions in one place across the mutual fund industry. We put out CAMS Wealth Serve, which is a digital onboarding platform, a single platform where you can onboard HNI consumers onto PMS and AIF. And we've acquired about 8 to 10% of the marketplace in terms of participants there already in the last 1 year. As far as My CAMS is concerned, we crossed the 5 million or 50 lakh subscriber mark. In October, November, we crossed the 1 crore login mark. So those are strong milestones that we've continued to post across our digital framework. And that continues to keep us excited, because as we make things easier for all of the constituent industries to perform and for investors to perform, we believe that their interest in the product classes will continue to grow.
Okay, thank you so much for joining us live today. That's